The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the July 3rd, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We begin our morning, a shortened trading session. We're going to, the New York Stock Exchange closes in just less than 2 hours at 1 o'clock today. But we start our day here with a rally. You've got the Dow trading up 382 points, about 0.9%, 0.9 for the S&P or 52 points, 1% for the NASDAQ 100, that's 221 points there, 0.9 for the Russell or 21, 0.2 for the Trend is only 30 points, 0.7 for the Semiconductor Index or 43 points, 202 points for the NASDAQ Composite. Gold is off 0.7% or 24 bucks. Silver's down 2 pennies, so somewhat flat. Light sweet crude up 62 cents. Consolidating with inside its profile. Natural gas printed out at 345. I made an error. I haven't used my black background charts for the show here for a while. And when I did the market update, I had the July contract, not the August contract in there. My apologies for that. So I have now corrected that. The number you're watching here for potential of an A to B equals CD pattern to the downside is $3.39. 3.394 to be exact. If we close below that, then we would get that would trigger an A to B equals CD pattern that would get us down to either the 186 or 237-ish level. But right now, that swing point is holding. That's at that 3.394 level out there. So we are trading below profile, and we are trading below its red oscillator and change line. Not shown on these charts here. That's why you got to really watch that level. Prices pushed down into that 339 level a couple of times, and so far it's held. But keep your eye on that. Let's do this here. So let me try to, obviously, how the shortened trading session out there. We got probably fewer people inside the Tiger's Den with folks getting ready or already out there celebrating. I'll be joining you in, 60. It's going to take me about 74 minutes. I'll join your celebration out there. But in the meantime, let's try to get a feel for what is going on inside of the markets. Number one, let's take a look at this here. We're going to kind of flip back and forth in between the white background charts and the black background charts. I've got everything right now, I think, on one screen, so I don't have to worry about talking about something and you see a blank screen. Where we're going to begin our day with those on the daily time frame, the daily equity future contract. Beautiful rally that we're having today. You can see in the ES Mini, we are in bar number 8 of a TD9 count pattern. We are in bar number 8 of a TD9 count pattern in the NQ. The NQ right now is negating it's a Rhodes Momentum Indicator topping pattern out there. We are in bar number 9. That says that the Dow confirms its TD9 count pattern today, completes that pattern on Monday. The Russell 2000 completes its pattern today, the TD9 count pattern is. It's also in wave number 7. Out there, that needs a lower high to confirm. And we know that the high of a TD9 count pattern can form on bars number 8. In order for bar number 9 to form come Monday, price must close above the close of bar number 5. So for any of you tracking that, you'll want to pay attention to that. What this is suggesting to me, at least, is that we've got a daily topping pattern that is forming out here. And I'd say it's as early as Monday. Maybe it's Monday, Tuesday type time frame. And we should see a retracement. A retracement for how long or where to? Well, the retracements should get... What are we not seeing? Your chart went paused. Al, are you seeing the daily? It's got full screen now. I don't know why I would go pause, but tell me if you're seeing the full screen here, the ES-Mini. I don't want to go too far if you guys aren't seeing my charts correctly. So just waiting for Al to get back to me here. It says the streaming is paused. That's weird. Okay. So, folks, I'm going to try to correct that. Let's try streaming again here. And what you should be seeing, and you should be seeing it right now, is the full screen of the ES-Mini, with today being bar number 8. And number 8's not shown there. It's got the letter B and D above that area out here. The question I was posing, and hopefully you guys are seeing the correct chart now, price should pull back. Now, if we come off of the April lows out here, the April 7th low, what we can see since then is we have had 1, 2, 3 2-day pullbacks, and we've had 1 3-day pullback and 1 4-day pullback. 4 days typically the most consecutive closes lower that you would get inside of a bull market out there. So I would expect we will get a 2 to 4 day retracement. Now, the first level of a retracement should be support, and that first level is going to be the oscillator and change line. It's currently printed 62.52. As you know, as price goes up and down, that's going to change by a few dollars. But 62.52. If price were to close below that, then the next level of support would be at 61.14. That would be the top of its daily profile. If we take a look at the NQ out here, in a moment we'll go ahead and populate that chart just so you're looking at the full daily time frame. Now, the NQ come Monday is going to, unless it just simply rallies, it's just simply going to have a little bit more complicated, a little bit more difficulty, I should say, in forming that bar number 9. In order to do that, it has to close above the close of bar number 5, and that's at 22,893.25. It's not really that far away from really where we're trading right now. Yes, we're above that a decent amount, but so that's the number that you'll be watching for on Monday. Don't worry, I'll be here with you. And then its TD9 count top won't complete. Well, first, we need to get a confirmation on Monday, and then we'll complete on Tuesday. Again, if you come back to the April 7th, lows out there, the NQ has had 2 3-bar pullbacks and 2 2-bar pullbacks. So we would expect in this case here to see a 2-bar pullback as well. Why wouldn't we be expecting to see something more than that? Now, that's a great question. And I should answer that question. I should have had the charts up to answer that question. I don't have the charts up to answer that question. Come on, Stevie, get your act together. I'm going to go ahead and put those charts up here. I don't know if they're going to populate in the next 20 seconds because I have both my black background system up and the white background system. But the reason is, as these are populating here, is really primarily because of the NQ. As you know, the NQ last Friday completed its TD9 count top. We're going to close above last Friday's high, unless there's some ginormous sell-off the next hour and 45 minutes, and I just don't see that coming. So with the NQ negating that signal, now if you look at the ES-Mini, you'll see its charts are populated. It's going to complete its TD9 count topping pattern this week. Come on, NQ. Before we really go to a hard break here, you will see last week was the TD9 count top. It needs to close back below 22,825.50 in order for that to remain in place. That's why this looks to me like only just a very short-term retracement, 2 to 4 days. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So during that first segment, what we established, the premise is that we've got daily topping patterns that are forming. We look at the daily equity future contracts. That suggests that we should see some type of short-term top. Typical tops in a bull market. We still are in a bull market out here. Anywhere from it could be just a one-day pullback, but typically 2 to 4 days. So that's what we're expecting for next week. Another reason to expect that or anticipate that is at this moment in time, we're looking at the charts here for the New York Stock Exchange. We've got the second panel. So the first panel is price. Second panel is the advanced decline oscillator. Is the advanced decline line. We are at a new all-time high on the advanced decline line. Anywhere you read or anybody who tells you that it's just the Mag 7 that are pulling these markets higher, they're out of their freaking mind. They would have absolutely zero clues as to how to read a chart. So if you see that out there, we're at a new all-time high today in the advanced decline line. When we take a look at the advanced decline oscillator, that is the next panel. As we speak right now, we are above the plus 150 area. The reading is 159.79. As I've shared with you on many occasions, when we close above plus 150, I don't know where we're going to close at 1 o'clock. Let's assume the close is right now. When you close above plus 150, that signals to you and I that we see higher price. Remember when the market was creaming to the downside back in the March-April timeframe? And then we had the advanced decline oscillator on the trading day of April 23rd get above the plus 150 level. What I shared with you then is we would see higher highs. It didn't mean the next day or the day after that. It meant in the future, and certainly that has come to fruition because we're new all-time highs out there. So this indicator, if we do close above the plus 150 area, adds that idea that we're still in a bull market, that we're going to see higher highs, and that the retracement is just going to be a couple of 2 to 4 days out there. The spot VIX, that's a very bottom panel, trading well below its 50-day exponential moving average, so that provides buyers with an edge out there. Okay, so we got that. Is there anything in the market that scares Stevie? Well, let's take a look at a couple of things out here. The first is how price is, how the S&P, I should say, is trading in all the major currencies out here. And this is a bit down. Now, we are trading higher. So this chart here, the upper left-hand, is showing you the S&P priced in dollars. Next to that, we've got the S&P priced in euros. You can see that we made an all-time high. These are weekly charts, by the way, that we're looking at. So it was the week of February 17th, 2025, that we made the all-time high for the S&P priced in euros out there. We're nowhere near that level. So that gives me a bit of a pause. In other words, what these charts are telling us, with the exception right now being Canadian dollars and Chinese yuan, and the reason I say with the exception of those is because we are trading new all-time highs in those two currencies. The other currencies we are not, whether it's euros, it's yen, it's pounds, the Swiss franc, Swedish krona, out there. But we are moving higher in Chinese yuan and in U.S. dollars and in Canadian dollars, and we are moving at least higher inside those other currencies. But this is a good enough reason to also get a 4-day pullback out there. So that would be one reason. Now, the Dow is where all the global capital really flows. Global capital is looking for liquidity, and so it's looking for large caps. We take a look at the Dow priced in U.S. dollars, very upper left-hand panel chart. We're getting close to the all-time high at 45,073. Nowhere near it in euros, nowhere near it in yen, nowhere near it in Australian dollars. Corona, Great British Pound, Swiss francs, Chinese yuan. Chinese yuan, we just poked above it today, today actually. And the Canadian dollar. So just those two currency pairs. So that's a reason. Again, we are moving higher in those currencies, but we're not at new all-time highs. So it just gives us a reason to have pause. A couple weeks back, I mentioned and take a look at the DAX for somebody. And Mr. Bill, this is really for you out here, because I haven't really had my black background screens up, and I don't think I really mentioned it at that point in time. But I had mentioned that it looked like, to me, the best trade out there over the course of next year is shorting the DAX. And there wasn't much in the way of topping signals out there. And I remember Mr. Bill said, "Well, wait a minute here. You don't. That's not how you trade. That's you wait for confirmation out there." Well, one of the things, we're taking a look at how the S&P was trading in multiple currencies. Here, I'm just taking a look at the DAX priced in dollars. So in U.S. dollars, that is the very top panel. That all-time high came back in June the 9th. Now, this is a line chart, so I'm just looking at closing prices right here. If we take a look at the DAX priced in Great British Pounds, the high came out here. Its all-time high was back in March 4th of 2025 out there. If we take a look at the DAX priced in euros, so its own currency, euros out there, it hasn't made a new all-time. It was the fact, Mr. Bill, that the DAX was not making all-time highs in terms of euros or even Great British Pounds that said there's something wrong in Denmark. Or really, there's something wrong in the DAX out there. And so I still think the DAX is still the ultimate of short trades, probably for the next year or so out there. And we'll see if I'm right. But again, we are not trading. This shows some pretty substantial weakness with regard to the DAX out there. We take a look at the horizontal trading ranges and diagonal rising price channels out there. You can see that the S&P 500 should rally up towards 65.27. Now, remember, we're looking for some type of topping pattern that takes us, at least we get some type of retracement for a couple, 2 to 4 days out there next week. But once that retracement is done, then I'll expect that price will resume and move its way up towards the 65.27 level. Coming off of the COVID crash, there's an A to B equals seating pattern. We are above the 1-to-1 level. The 1 to 1.272 takes us up towards 68.32 out there. If I take a look at again, I'm just, because you have the black background charts open typically during the show. I anticipated today's show would be a little bit quieter because of the holiday. If we take a look at the U.S. dollar index, I believe the U.S. dollar index is getting closer, has bottomed out here. If we take a look at the quarterly time frame, the very bottom right-hand panel chart, you're going to see a consolidation pattern, and we're at the bottom of that consolidation. On the monthly time frame, I show rising price channel and in a corrective price channel with inside that. And you can see in that corrective price channel, we're very close to the bottom of that channel line as well. So we're getting close to a bottom. The weekly has us thrown off just a tad, and that we're trading below. Well, what we're not doing is we're not trading below the swing point. Now, even though this is going to say apogee out here, that's really not where apogee is. But if we were to close below 96 29, then I would say, there's some fault in the technical analysis, Steve-O. What we're waiting for here is we're waiting to see if the U.S. dollar can form a Rhodes momentum indicator bottom pattern for its daily time frame. It needs a bullish reversal candle to do that. We don't have that at the moment. That's the first thing we're looking for. And the second thing we're looking for is for price to get back inside of profile levels. In order to do that, the U.S. dollar index has got to close back above 97.30 out there. With regard to gold, if the U.S. dollar index is going to find a bottom out here, be really careful with regard to gold. Remember, in the case of gold's primary, it's not inflation. It's about geopolitical and war-oriented type events out there. The premium inside of gold really began during the Hamas attack at that festival on October 7th in 23. Price just simply continued to move up. Now what I put in here up at the top, you'll see that June 13th Iran date. And you can see, what has that identified? That has identified a top out there. Be very careful. I'd say just be very careful out there. If we take a look at gold price in major currencies, we're, again, I say, and even if we take a look at gold in the Middle Eastern currencies, we got price that's moving lower out there. Just be careful at this point in time with regard to Goldilocks. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Well, Stevie kind of screwed up during that break. I went ahead and closed down. Oh, maybe not. Maybe it's going to fire up. I closed down the black background system just so that we'd speed things up on the white background charts. And I tried to get the, my market analyzer just kind of tells us where we're at with the number of instruments out there on the left. And it's taken a long time to populate. I was going to go ahead and shut things down. I think I am just going to shut things down on that portion of it, and we'll start it back up. The other thing I did, which I shouldn't have done, was I closed down that black set of screens before I did one thing. And the one thing was really for Greg. And Greg had written in, what's this here? No, I don't want to install. Let's skip this. I'm just trying to get the system back up and running. So if you just kind of give me a second here, and we'll get that up, and then the charts will populate pretty quick once I get them up. But Greg was asking, his eyes were looking at the GDX and gold. And as you know, there's a directional correlation there, or at least there should be a directional correlation. And his eyes were not seeing that. Greg, I ran the directional correlation chart. It's on that black background system, as you know. And it showed it on a 3-day level. It's a 3-day average. It was very directionally correlated, meaning, if one's going up, the other is basically going up. Again, it's an average thing out there, and the 5-day average was really solid. So what I will do, and is I will send you that chart this evening, because as soon as the show is over, Stevie's out the door. I need to get to a golf game, but I will send it afterwards for sure, so that you can see that as well. But in the meantime, out here, let's actually take a look at the GDX. So now that we've got our charts here populated, let's look at the GDX for Greg. If you're going to have to be careful with gold moving lower and the U.S. dollar moving higher, we may see that correlation begin again. We may. Look, if all bets are off, if things start going awry in Ukraine, or things start going awry in the Middle East. But been pretty slow, hasn't it? Since the bombing last week. I mean, it's been pretty, it's great. So with regard to the GDX, Greg, here's what it's doing right now. It has a Rhodes momentum indicator top. That was formed with a bearish shooting star. That was formed in a trading session of June the 16th. In essence, right now, it's led to pretty much a consolidation with inside its daily profile. We had one close below profile support. That was on June the 10th. Very next day, we were back up inside it, so that was a false breakdown. We were back below it once again on June 27th. Very next day, back above it, false breakdown. If we do get that breakdown message, 2 consecutive closes below profile support, 51.68, it's going to open up the door for a move to either to the 46.65 to 48.94 level out there. That's the bottom of the weekly profile, and that's the daily TD9 count breakout level. The monthly time frame for the GDX, Greg, does not have a topping pattern. So the GDX has got a topping pattern on the daily. It's got a sell the D point on the weekly. Price really in the weekly hasn't, has it gone back to support? Maybe. We closed below the oscillator and change line last week. We're back above it this week. But as long as prices is consolidating, no breakout in the daily still is finding resistance at its oscillator and change line. I think more likely than not, the GDX is getting ready to pull back to test that 48.94-ish type level out there. But time will tell. Even if it does that, longer term, the GDX, again, as I said, right now at least does not have a topping pattern. If we saw some type of bearish reversal candle form, then the answer would be yes, we would have that. But at this moment, we do not. So, Greg, I'll send you that chart again, like I said, this evening or over the weekend for the correlation. I saw a very strong directional correlation even still. Dan wrote in, and Dan wanted to take a ticker symbol CRDF. So let's go ahead and fire that up here. These charts should populate pretty quickly because now I've only got one set of charts open, and the only way to get it faster is I would have had to reboot to clear some of the cache. If we take a look at CRDF, Dan, this is trading, as you know, this is trading above the top of its daily profile and its green oscillator and change line without any kind of topping signal. Those, simply put, are bullish conditions out there. So the daily time frame for CRDF is suggesting that it should rally. Well, if we look at the weekly time frame chart, it appears we'll close the week above its green oscillator and change line and above the top of its profile. It's very possible that the C point of an A to B equals CD was put in 2 weeks ago. This is also in a bullish mode. It's got no resistance with the exception of the Three River Evening Star candle formation and the swing point that is testing from the week of June 13th. That had volume of 6.2 million shares. This week we're in it with 6.4 million shares on a shortened trading weekend session. So price is pushing into a swing point with volume. That, Dan, tells us that price should continue to head higher. Even if it closes the day below 367, we're at 362, that would be considered a rejection, but it would be a rejection with volume. That says you at least get back up to test the low of that pattern. I would say because you're trading above resistance, you're going to at least go up and test the high. On a monthly basis, CRDF is just simply consolidating with inside its bullish structured profile. It is traded above the center line, which is at 346. You're at 362. A monthly close above 346 is going to say 528 is in the cards over there over time. So that's what we see when we take a look at the CRDF. Dan, thanks so much for that request. You're the only one with requests at this stage here. That's a beautiful thing. Oh, May Jambalaya has put in a couple as well. So let's take a look at IBRX. That's the next request for Dan inside the Tiger's Den. See what this thing is trading at. Looks like $2.68 with inside its daily profile. Now, formed a TD9 count top, got back to its breakout level at 250. Doesn't have a bottoming pattern. That itself can be a bottoming pattern. Well, let's take that back. Looks like I got a Gartley buy pattern here yesterday. So let's put in the A to B equals CD pattern. Here's your A to B. Let's move this over to the C point out there. Dan, just check my math. Make sure that, well, it is close but no cigar. Even that would have gotten us down to 246. So let's say it's not a buy the D point pattern. What you've got out here, look, getting back to the breakout level of support, can't be a bottom. Now price is traded with inside its profile. You've got next level of support is 261, the bottom of this new profile. Your sell zone, resistance area, 276 to 283. Clear 283, and you are off to 299. Clear 299, you're off to 330. Clear 330, you're off to 351. You've got a real nice monthly TD9 count bottom pattern. What you really need to see here with IBRX, Dan, is for price to clear its oscillator and change line. And that's at 285. So, you got 283 as a resistance level. On the daily time frame, you've got 285 as the oscillator and change line on the monthly time frame. That's the real battleground. You clear that, and IBRX has got free reign to continue to move higher. You want to look at ticker symbol GEVO. Let's get that up on our screen. See what GEVO is doing out here. GEVO traded at $1.49, traded above the daily oscillator and change line as well as the profile. It's in a breakout mode. It's in a rally mode. The weekly time frame chart wants to join along, but right now it's dealing with the sellers. No sellers exist at $1.49. We're trading at $1.49. You close above $1.49. No, I don't mean $1.50 or $1.51. Really close above $1.49 out there, and you're off and on your way to $2.17. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're looking at ticker symbol FETH, FETH. This is for Jambalaya inside the Tiger's Den. FETH right now. You know, yesterday, Jam, it looked like we were going to get a breakout message with price closing just above the top of its daily profile. When I say just above, yesterday's close, 2603, profile resistance 2597. We're back below it. So this consolidation with inside the daily profile of 2597, resistance 2421 to 2480 being the support zone, still in place out there. You also have a weekly consolidation with inside profile. Now, you'd love to see today close above 24.97. Looks like that's a pretty likely outcome. That says that price wants to get to 27.37, but you got to bust through the top of that daily profile. Not enough data for the monthly for us to really do much here. So hope that helps you out. You also want to take a look at Palantir. PLTR is a ticker symbol. So let's go ahead and get Palantir populated. I just kept it for our purposes, folks, just this one set of charts here versus all the setup that I typically do ahead of time. We take a look at Palantir. First, on a monthly basis, Palantir negated its TD9 count pattern 2 days ago. So it had a TD9 count top for the month of May, and it negated that last month. So Palantir, longer term. Because the question, well, I don't remember what the question was. If there was a question, longer term, Palantir wants to move higher. The weekly time frame has a valid TD9 count top. And that's with Ben. We may even have a sell the D point. We don't need both. We just need a top. Now, price is consolidated with inside its daily profile. In order to, and that daily profile has support at 113.90, resistance 139.64 out there. The center of the profile is pretty much in the center at 126.77, maybe slightly bearish in structure, but pretty much in the center out there. And on the daily time frame, you have a new profile that's formed today, 130.48 at support, 146.25 as the resistance area out there. The daily time frame does not have a top. Well, let me hold on a minute. Take that back. It has a Rhodes momentum indicator top with price now consolidating with inside the daily profile out there. Watch 130.48 to the downside. If we close below that, you're looking at 126.77. Below that, you're looking at 113.90. And again, longer term, Palantir looks like it wants to continue to move higher. The next request coming in from John C. inside the Tiger's Den is to take a look at NVIDIA. And the specific question is, are there any topping patterns? Let's get those charts here populated, and we'll answer that question for you. Why didn't that take? There we go. It's loading right now. NVIDIA on the daily time frame. The daily time frame, as I see it, there is no topping pattern that is in place out here. What is, in fact, if anything, it's negating a sell the D point top as we speak right now. In order to do that, it needs a close above the high from June 30th. June 30th's high was 158.66. That set up your Three River Evening Star candle formation. Closing above that resistance level will suggest that we want to move higher. The weekly chart says if you can close above last week's high, 158.71. We're at 159.63. If we close above that, NVIDIA will negate its weekly TD9 count top. On a monthly time frame out here, where we are at is I do not see any kind of a topping pattern at this stage of the game. We're above profile and its oscillator and change line. So NVIDIA wants to continue to move higher. What it needs to do is prove to you today that by negating the weekly TD9 count top, and again, that's a close above 158.71 and a close above, 158.71. That does it on the daily as well. We close above that. You've got no tops in place for the daily or weekly, and there's certainly nothing in there for the monthly, and that says that NVIDIA would want to continue to move higher. Greg writes in, and Greg would like to take a look at LUMN. Let's take a look at LUMN, see what we've got going on here. This is trading out right now at $4.62. And Greg, this is going to form a TD9 count top today. It'll complete that topping pattern on Monday. What that suggests is that we should see a 2 to 4 day pullback. The pullback should target at least first its oscillator and change line, currently printed at $4.38. If price is able to move below that level, the next area of support would be 428. Below that, 407. Below that, 392. The weekly time frame chart just has price trading with inside its profile, as does the monthly. The monthly found support at its oscillator and change line. We're trading above last month's high. We're trading above last week's high. We're trading above yesterday's high. Those are all bullish signals out there. That being said, LUMN, Greg, is going to go ahead and confirm a TD9 count top today, as I said earlier, complete that top on Monday. That says that Monday or Tuesday, we should start pulling back to those retracement levels that we provided. So I hope that helps you out. And as always, thank you for writing in. If actually, I think that might have been your first time, if I am not mistaken, but I'm easily mistaken. XPEV, this is one of GTE's favorite stocks. And as we take a look at XPEV, it's trading out at $18.75. Today will be 3 days of rally in a row. It is just consolidating with inside its daily profile. There's really not a whole lot going on here. It's trading between the range of 1669 up to 1946. The weekly time frame, which has a TD9 count top, continues to form basically lower highs out there and lower lows. So even though it's a green bodied candle, don't get married to it. XPEV is suggesting to you and I that it wants to head lower. 1597. Excuse me. Must have sucked in a fur ball there. That's not pleasant. Now, prices are going to get down to 1597 until the daily gets back below that red oscillator and change line at 1848 out there. Rallies, if we take a look at XPEV, just understanding the simple cadence of a market, the simple tempo of a market. If we look at the rallies out here, 3-day rally, consecutive rally, 3-day, 4-day, 3-day, 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 2-day, 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 and today's going to be a 3-day rally. XPEV, GT, what do you think the odds are that we're going to see a retracement tomorrow on Friday or on Monday for XPEV? Let's go. The idea of that is pretty darn good. Glenn wants to take a look at Roblox out here, RBLX. So let's put that up on our screen out here, see what's going on there. And folks, if you're in the den, we're about to, I think we're going to go to the last segment here after this. But you could type in a request. Happy to get to it. Roblox got a TD9 count top for its daily time frame. It's got a consolidation with inside its daily profile. That's between the range of 99.52 and 104.14 out there. The weekly time frame has a completed TD9 count top. It completed last week. That should take price back towards 93.39. We ain't getting back to 93.39 unless we close below profile support at 99.52. Keep your eyes focused on that. The monthly time frame for Roblox is in an A to B equals CD pattern to the upside out there. It does not have any kind of a topping pattern. We're trading above profile. So with regard to Roblox, the issue that it is dealing with out here, Glenn, is dealing with its daily and its weekly time frame. The daily time frame, we really use the weekly time frame. What you're waiting for here is a close above 105.87. If it does that, then Roblox is getting ready to continue to head higher out there. But in the meantime, right now, it looks like you should get a retracement. And that retracement eyeing that green oscillator and change line for its weekly time frame. So that's it for Roblox. We're going to a break right now. We come back from this break. I'll try to come up with something for us to take a look at. And on Terrific Thursday, Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Mohammed writes in, would like to take a look at ticker symbol CFFN. CFFN is printing out at $6.41. It's trading above the top of its monthly profile. That's bullish. It's trading above the top of its weekly profile, $5.94. That is bullish. It's trading into bar number 9 of a TD9 count. Today we'll confirm a TD9 count, Mohammed. Monday we'll go ahead and complete that pattern. That's going to suggest a retracement back towards its oscillator and change line at about 615. At that stage, that would be your buy point out there, right around that oscillator and change line level. You also wanted to take a quick peek at DENN. I didn't know that there was a den inside the den. DENN is running into daily resistance. That happens to be its sell zone. The sell zone exists between 453 and 464. That's courtesy of that daily profile. It also has resistance established by just simply Japanese candlestick formation on May 12th. That resistance formed by that bearish engulfing candles up at 475. So you're up at resistance. If you can clear 475, you're off to the races. Now, if you can close above 475 on a weekly basis, do it with more than 3.8 million shares, you will generate an A to B equals CD pattern on the upside. This week, you've done 1.8 million shares. Obviously, a shortened trading week and lighter volume, but it looks like it's lighter volume anyways. But if you were able to close above that area, you'd get an A to B equals CD that's got a price projection around the 552 mark out there. The monthly time frame looks to me like it's got a buy the D point bottom pattern out here. Hold on a second here. Pull this back. Yeah, there was an A to B, so it's got a buy the D point bottom pattern, and it has a new profile that formed, and that support is at 334, Mohammed, and resists up at 578. So again, the daily is struggling with resistance out there. Maybe you get a couple day, 2 or 3 day pullback before it makes another attempt to take out resistance, and if you take out resistance, you're up towards that 552 level. Folks, I want you to have a safe and happy 4th of July holiday. Again, the market's closed in about an hour's time. They'll be closed tomorrow, but I'll be back with you on Magical Monday. So have a fantastic Friday, a terrific Thursday, a wonderful weekend, and a happy and safe 4th of July. Take care. We'll see you soon.